So I think one ongoing battle that investors have is the battle of, do I invest for the long term and not worry so much about dividends, or do I just strictly focus on dividends so I can get the short term gains right now? And honestly, I'm kind of teetering with the whole end. Again, I've only been investing for about a year and a half now, so my mindset is starting to change a little bit, and it's been changing a little bit more since I started using M1 Finance. And there's a lot that M1 Finance does just from how it looks that makes you more motivated to invest in the long term. So I tried it out and let's talk about it. What's going on, guys? My name is Darren Jackson. Hopefully you've all had a great week so far. Hopefully you guys are investing in those Apple stocks, waiting for this 4-to-1 divide. And yes, my background is a little different. As you can see, I'm recently getting settled into my new place, so don't mind me. Hopefully it'll look better at some point soon. But today I wanted to talk about long-term growth. I mentioned earlier how my mindset is progressively starting to become a little bit different on how it was. I'm still a dividend investor, but after trying out M1 Finance, I'm starting to get different priorities. But that's a topic for another day. Today, in this video breakdown, we're gonna be talking about, M1 Finance, specifically what type of brokerage app it is, especially in comparison to its major rival Robinhood, which is a brokerage account I primarily use. We're also gonna go over my portfolio and the stocks I've decided to invest into through M1 Finance, and just kind of my mindset on the past month or so of me using M1 Finance and how it's starting to change the way I see dividend investing. So I've had M1 Finance on my phone for the past couple of months, and I finally started to use it about a month ago after I watched a video, I believe it was by Galen Mast, a couple of months ago. And out the gate, this program is a lot different from Robinhood. So with Robinhood, it gives you all the information up front. You're able to see the daily gains, you can see your overall portfolio, whether you want to see daily, weekly, monthly, 3 months, year, all time. You can see that with the individual stock, the equity changes by the day, overall changes. All the information is there for you to see, which can motivate you to make changes right then and there if you want to. M1's a little different. So with M1, you see the overall grand scheme of things at the beginning. You see your pie chart, and it's divided based upon how many stocks you have within that pie, and I recently realized that you can have sub pies. Seems kind of complicated. I don't know if I'm gonna go into that at any point soon, but you can have sub pies. So you can have even more stocks within your stock portfolio, but you see the grand scheme of things. And I feel like that's beneficial for people that are more so into the long-term growth investing, whether you're wanting dividends or not. Now for me, I always call myself a long-term growth and dividend investor, but I feel like I've been shying more into the dividend aspect of it and not really paying attention to the growth that those particular stocks that have a 12% dividend yield have. Otherwise, I probably wouldn't have invested in those stocks. And I think I've talked about that briefly before. But with M1 Finance, you see the overall growth. So if it's negative, you know that despite how much you're getting back in dividends, that you're not getting them in the right stocks, and it may be to the point where those stocks aren't going to be giving you dividends for long. So speaking of my little pie chart, I decided to start off by investing into 3 different stocks. Well, one's an ETF, and the other 2 are regular stocks. So based off the breakdown, the first stock I invested in is a common stock that we all know and love, or at least know, which is Tesla. I have 34% of my portfolio within Tesla stocks right now. And the reason I have Tesla as my biggest benefactor within my pie chart is just because I firmly believe in what this company stands for. I feel like they're gonna be one of the biggest companies in the world alongside other companies like Disney and Amazon and even Facebook. It's led by CEO Elon Musk, who's so revolutionary, from his electric vehicles to the SpaceX program, and to even clothes, which I more than likely won't buy because I don't feel that it's beneficial to spend almost $100 on shorts. I'm pretty sure that's how much they are. I'll probably have to look that up later. But I firmly believe in what their goal is for the world altogether. They're obviously the leading car manufacturer for electric vehicles, and they've built this amazing infrastructure for power stations around the entire country. So they already have that set. They're coming out with new vehicles. They're setting up a new gigafactory in Austin, which on a side note, I really wish it was in Tulsa because I really feel like they could have brought more opportunities there. But I get why they picked Austin. So that's more vehicles that they're building. I believe the Tesla Y. I'm pretty sure I heard something about them building new batteries that could hopefully reduce the price of all their vehicles, because they kind of are a little pricey. So if you make them more available for everybody, then obviously more money, cleaner earth, all that good stuff. So that's a company that I believe in, regardless of this bubble that people claim it's in, which it kind of makes sense. It's this whole EV situation and stocks are going up. And because you're talking about those EV stocks, Tesla's starting to go up a little bit more on top of the decisions they're making. But considering I haven't bought so much of Tesla, I think I'll only have maybe $60 worth of stock. So very minor fractional shares in comparison to the $1,400 that they're worth. I'm not too concerned about the gains and losses. I feel like overall they're gonna do great. So the next stock I have is an ETF. It's the only ETF I have in this portfolio. It's called the Invesco QQQ Trust, ticker symbol obviously QQQ, and it tracks a modified market weight cap of the top 100 largest traded companies within America. So it tracks off the NASDAQ 100. But what's pretty cool out the gate about this ETF is that it balances them all equally. So not by market weight, which is good, because if that company does really bad, then that can have a major negative impact on this entire ETF. Now, I'm pretty glad that I decided to invest 33% of my portfolio into QQQ, especially during a time like this, because some of their top sectors within the ETF are in information technology and telecommunications. So some of their top stocks within this ETF are Apple, Microsoft, Facebook, Amazon, and Google, the 5 juggernauts within the tech stock market. I'm pretty sure AT&T is somewhere in there as well. So I'm really comfortable with all these stocks that the ETF covers, or at least in the biggest sectors of this ETF, and their impacts in the future and how much growth that they could potentially have as well. So now this ETF does pay dividends, but the dividend yield is pretty small. It's about a 0.626% dividend yield, I believe, which means it pays about $1.50 every single year. So that's about 40-ish cents a quarter. So it looks like overall that the yield has increased over the past couple of years, and within every year, it pays about 30-something cents in the first and third quarter and about 40-something-ish cents in the second and fourth. So it's very consistent and it's increasing. So this is one of those major changes I've made in investing, where I'm investing in a ETF or a stock that has a very low dividend yield, which seems unappealing until you look at its overall gain. So I'm pretty excited about investing in that ETF and what it can do for me in the future. And speaking of future, the third stock that I decided to invest in was a little bit higher of a dividend yield, but it is a stock that hasn't failed at this point yet. It hasn't failed in a long time, which is JNJ, or Johnson & Johnson. I made a video about a couple months ago about dividend aristocrats, which are stocks that have increased their dividend payouts for the past 25 years consecutively. This is not only a dividend aristocrat, but it's something called a dividend king. And a dividend king does the same thing, but at least for 50 years. And I'm pretty sure Johnson & Johnson right now is on their 58th year. So they're consistently paying out dividends and increasing their dividend yield, which is pretty easy for them considering the sector they cover. They're all about healthcare, medical supplies, bandages, just anything medicine is probably something written off by Johnson & Johnson. Now, Johnson & Johnson pays about a 2.6% dividend yield, so it's not extremely high, but it is a lot higher in comparison to my only other dividend paid out stock. And that means it pays out about $1.01 per quarter, which is actually an increase from the previous year. So again, it's consistently increasing. So I'm investing 33% as well into that particular stock, and slow and steady, but I'm expecting to hopefully make some overall gains as I continue to invest into that company and to increase my investments in the overall portfolio. Speaking of which, I currently only invest about $10 a week, so about $40-ish a month into that portfolio overall. And it has changed my mindset a little bit on investing, which I'll definitely again talk about more in a later video. But looking at my Robinhood stock, I'm constantly looking at that every single day. I'm looking at each stock every single day. And when it comes to N1, maybe twice a week, maybe once a week, just to make sure my transfers went through. And that's ultimately it. And I feel like that's an obstacle that a lot of us investors face. Do you want to invest in a stock that'll pay you a lot of dividends, but you may have to consistently look and analyze the stock? Or do you want to invest in a stock that may pay a little bit of dividends or none at all, but you know it has a reputation of growth, and you can be comfortable with investing in it and roughly never having to look at it again until you want to take the funds out. So that's something I'm figuring out right now, but I feel like M1 is giving me the opportunity to have that mindset just for a little bit while I also play around with Robinhood. So we'll see what happens. I'll definitely focus on that later on. I'll make sure I keep you guys updated on this M1 stock as it continues to grow. So I appreciate you guys watching this video. Make sure you guys watch some of these other videos, and hopefully they help all of you out in your investing journey as they have in mine. I appreciate you guys watching once again, and until next Thursday, take care.